Okay, let's get a sense of what is happening around the traps with James Gerrish at Shaw and Partners, joining us live via Skype in Sydney. Hi, James. Welcome back to Ausbiz. Let's kick off with Telstra. A pretty strong response there to talks of a possible restructure.
Yeah, good morning to you guys. It obviously a strong session for Telstra. It's up trading about 5% higher when I left the trading desk. So anything that talks about unlocking value in Telstra is obviously a positive thing. They also put out this aspirational EBITDA. I don't know if you'd call it guidance, but it's an aspiration for FY23, which was something between 7.5 billion and 8.5 billion. So the market was for 23 numbers. I know they're a long way out, but the market was at 7.48. So it's a slight upgrade to longer term numbers for Telstra.
James, Xero seems to go from strength to strength, including the MSCI index inclusion yesterday. Then today, a pretty solid result reported by the group. No, cost control as well was something that stood out to me. What did you make of that result?
Yeah, it was a good result, Scuddy. So obviously conditions have been pretty tough in corporate Australia as well as other areas of the world that they operate in, but they still managed to grow subscribers pretty strongly. They grew them by 396,000 on PCP, so their total subscribers are at 2.45 million. That's a big number. The financial metrics that you made mention of, so EBITDA was a big beat. Profit was a big beat, so they beat on those areas. The growth in the subscriber numbers has slowed a little bit. That's one thing I would call out. And also ARPU, the average revenue per user, was down 3% over the period. That's not unexpected, but probably slightly more than what the market was factoring in. So index inclusions are positive. These results today show that the business is continuing to grow and heading in the right direction. So that's one I continue to like, Scuddy.
And James, how's Wesfarmers looking today? Had a trading update there. Bunnings sales up, I think, about 25%. What does the market make of it?
Yeah, cracking numbers from Wesfarmers today. Obviously, the market was positioned for some strong numbers and they delivered on it. So if you think about Bunnings growing like-for-like sales at just a shade under 31%, that's a phenomenal number. If you look at Officeworks, did a similar number, so they grew like-for-like sales at 23.5%. The other important thing to sort of drag out of Officeworks is online penetration was really high, so at 39%. So a lot of people buying office supplies online. So, you know, Wesfarmers is expensive. It's trading sort of 28 times earnings, but it's delivering on a combination of, you know, consistency and growth. So I continue to like Wesfarmers as well after today's update.
Emeco is another company that's gone and holding its AGM today and providing an update. I can see its share price up 4%. Mining services are doing pretty well given the strength in that sector. What did you make of the result?
Yeah, it's been a challenge, Emeco, over the last 12 months or so. So they've had a concerted effort to de-gear their balance sheet, which they've done. They talked to that at their AGM today. They also reaffirmed guidance for EBITDA of 115 to 118 for the 6 months to December. So that's a positive. The market's at 114, so the market thought they probably may come in a shade under guidance. The fact that they're unlikely to do that is a positive. So this is a turnaround story, as you may mention, of mining services, earth moving equipment rental, and I think it'll do better from here. They've had a pretty big transition year over the last 12 months, so it's on the improve, that one, Scotty.
Now, James, I understand another thing you're following today is IVE Group and its trading update. What's happened there?
Yeah, this is an interesting one. Again, this is another stock that's been really had a challenging 12 months. They run a large printing business. They lost a large-scale printing contract with Coles. They've won a few along the way, but it's been a really challenging year for the group. They had some balance sheet issues, etc. But today they've announced a share buyback. They're going to buy up to 10% of the company back on market. It's about 14 million shares, so it's obviously supportive of the share price. And they also reaffirmed full-year guidance. Plus, they said they're likely to start dividends again in the first half of FY21. So all up, a pretty good update from a business again, pretty much like EHL, that's in a turnaround phase that should do better from here.
James, you're a pretty good gauge as to sentiment out there at the moment. The big debate everyone is talking about around here is value versus growth and whether the rotation that we saw earlier this week can be sustained. What the kind of conversations that are you having at the moment?
Yeah, so I can only speak to what I've done across our portfolio, Scuddy. So we had a growth skew, so skewed towards technology both here and overseas. So we've trimmed that, but not completely alleviated our positions across there. So we've still got meaningful positions in growth, but we simply upweighted more in the value space. You know, it's been a huge outperformance of growth over the last couple of years versus value. You know, if the pendulum swings just a short amount, then you'll see value start to outperform. So, you know, I think the main thing there is the rise in 10-year yields. That's been a really key factor in my mind over the last week or so. You know, higher yields are supportive of more value-orientated areas of the market, banks, resources, some select industrials, etc. And as a headwind for you know, high valuation tech, etc. So I think it's got more to play out, but I'm not elite. You know, you don't just pull away completely from growth. You tweak your allocations, you know, given the prevailing conditions.
You mentioned that 10-year bond yield off about 7 basis points and where it was trading this time yesterday, so maybe that explains why the rush back into growth we've seen today. James Gerrish from Shaw & Partners, fantastic to get your views. As always, enjoy the rest of your day.
Thanks, guys.